So before we dive into the class, where we're going to cover our targets for SPY and the different scenarios and probabilities you should be thinking about for outcomes post tariffs or if they continue to be left on, I do want to say that this is recorded in our Discord as part of our free classes, free to join the Discord, free to attend these classes. The man teaching today, it will be just known as Joe. He's a former $1 billion fund manager, and he now works independently. He is a licensed financial advisor, but nothing here should be considered financial advice. It's done for educational purposes. But if you would like to attend these classes, talk to people like Joe, who are licensed professionals or real estate professionals, private equity professionals, or full-time traders, professional traders like me. I mean, if you do it full time, you're basically a professional, right? A lot of people like to throw a fit because I have not worked at an institution before, but if I could do it full time, I think that's as pro as it gets, right? So there's several people like me as well. We all do these classes for free. You do not have to be a paid subscriber, okay? Education with us is free. If you want some of our professional services, you can learn about those after you get educated, right? That is the goal here. So make sure to check out the links down below. And without further ado, enjoy the class.
I plan to pretty much start by covering tariffs, kind of in detail on what they are, how they're going to affect the markets, which areas of the markets they're going to affect the most, why, and how to kind of look for companies that you could find as good opportunities to short or long based on what's going on. Followed by, I just got some of my thoughts and charts on the S&P 500, and then if we have time, I've got some data, and I'll probably do another class for this next week, but about the eight key historical kind of ways to figure out if the market's bottomed and when it bottoms. But I got a couple slides, but I think I can put a lot more together on that. But I want to make sure there's plenty of time for questions here. So most important things here to know about tariffs, and this is probably redundant for a lot of people here, but bear with me. They can really start affecting the economy within weeks or months. The full effect takes a minimum generally of 6 months, generally closer towards a year, and it depends on a lot of different factors. So you're going to see immediate air impacts in terms of tariffs on Mexico are going to make your avocados go up next week. But you're not going to see the massive issues with, for instance, iPhones, where you got so many million of them in stockpile here. That's going to take time to come over. And they really affect everything. Everything's a global economy now. So you're looking at a 10% tariff again on steel. You're going to see construction costs skyrocket. That's going to be passed on to the consumer. And at the end of the day, that's what really gets killed is the consumer, especially the low income consumer, sadly. But what the most important thing you want to watch longer term is, are these companies going to shift production to other countries? Is it going to affect the country's employment? I think China's royally screwed for that reason, because you're going to see more and more companies come out of China. In addition, if I remember correctly, I looked at it last week, the yuan, the Chinese version of the dollar, Chinese currency, is down about 18%. And that's really important to understand, and why I would be super short China right now, is that they're already going through an economic crisis. So now, and a real estate crisis. So you've already had the real estate market over there get killed. You got all these investors from across the world invested over there, and now the properties are worth 18% less again in a matter of, I had to pull the chart up, with 6 months. If you want to talk about like a 2008 happening here, I mean, it's going to be tenfold what's going on over there, and I don't know how they're ever going to really recover from that. That'll be interesting to watch, but. A great example of kind of what tariffs did. We have an example from last time Trump was president here. Agricultural exports dropped off massively in 2018, 2019, because we export so much stuff over to China. So, well, if we can get rid of the tariffs relatively soon, you're not going to see a massive dip in what's going to happen with the global economy. You might see a 1 or 2 quarter GDP slump, but you're not going to see something crazy. If they sit on for 12 months, then I think everybody needs to really kind of reevaluate and figure out what in the world are we going to do, because that's when you would have kind of like an 08, 2008, 2001 type correction, in my opinion. If we can get rid of them pretty soon, I don't think we're going to have anything crazy. I think we'll go over kind of some levels I got later, but a pretty quick correction that should be done by, call it September, October, maybe much sooner, just depending on how stuff plays out. So most important thing is how fast the tariffs get put on, how long they last, and then the scope, obviously, what percentage of the tariffs are going to be. You got to figure out the economic context. Is it going to cause inflation? Obviously, that's been the Fed's biggest issue. Again, if those tariffs stay on for a long time, it is going to cause inflation here in the United States. I think that is the major reason why Powell is not doing anything. And I don't think he's going to do anything unless we have a true economic collapse and we see inflation start to rise massively and unemployment go way up. So I wouldn't expect the Fed bailout anytime soon. He's been pretty much sitting on his hands here. You want to see if there's retaliation or compliance. Obviously, I think we're going to get a lot of compliance with a lot of countries. I do think that this China specifically, though, is going to be drug out for a long time. I think Trump has had enough of the IP theft and the one-way tariffs, especially with them. They just take everything we have, produce it over there, and sell their crap back to us. Sell our crap back to us, pretty much. All right, one thing to figure out is and this is a way you can kind of target how you want to play long or short in certain areas. But I'm going to go over the sectors that are most affected and least affected by the tariffs here. So again, the ones that are most affected are going to be those with the heavy global sourcing. Obviously, right? Because that's what's going to be tariffed here. So industrials are an incredibly global market. They're probably the sector that's going to be affected the most, specifically steel and aluminum. You saw, and that it would include companies that use a lot of steel and aluminum, such as Caterpillar, Boeing. I think, Josh, do you know if China's stopped any purchases of Boeing of the planes?
Um, I don't know if China has a particular. In fact, I think there's been. So I don't think China has in particular. No, I know some. I know part of the deals that are being. I don't think it's been finalized, but I know part of the deals being made right now they'll offer increased purchases and instead of like increased trade from Boeing and other U.S. companies, but which it might negatively affect Airbus. But I don't know about the trade China relationship in particular.
Okay. Yeah, I thought I heard something, but I don't recall. So, companies that are going to be crushed are going to be Deere and Caterpillar. Anybody in the aluminum and steel industry has got a lot of issues to worry about here. Again, at the bottom, heavy machinery, aerospace, et cetera. That's pretty logical in my opinion here. The next biggest one is going to be your consumer discretionary. We make just about everything overseas, so if we're tariffing it to come in, you get retaliatory tariffs, everything costs more. Again, that hurts the consumer. Shopify, being a Canadian company, is one of my big positions, and I know they've gotten just absolutely whacked on these tariffs here. You got to be careful with anything in the consumer discretionary. And again, you can always also look at this as a flip. Once eventually Trump does come to, or the United States does come to certain tariff agreements here with countries, you're going to see a lot of these companies just skyrocket back up, such as that was it last week or 2 weeks ago when they put a pause with or talking with Vietnam, and you saw in 10 minutes Nike go from down 4% to up 5%. So it's going to be a lot of quick moves, and once these are actually fixed, in my opinion, even if you miss the initial move, whether it's 10, 15%, you're still going to have a long tally and a long ride going from there. And I'll give this whole presentation to Josh. He can put it wherever. Materials, again, kind of go along with the industrials here. Big one in the news was Dow Chemicals. China's like looking into them, interrogating them, trying to figure out if they've got anything illegal going on. It's just a crock of bull crap and a retaliatory measure for the tariffs levied on them. Subsectors would be metals, mining, and chemicals. The one that's not really doing anything, surprisingly, is gold, and that's because of the price of gold. The gold miners have done well, but if you look at the other miners like Alcoa, et cetera, they've done very poorly here. Technology, obviously, your big cap tech stuff, your NVIDIA, your AMDs, your Apples is going to be massively negatively influenced. The smaller technology companies aren't going to be hurt as hard. But anyone who's got their revenues massively coming from overseas is going to be crushed, specifically in the equipment side, the semiconductors. And then the agriculture space. We are the world's largest exporter of agriculture. It really hurts the farmers when you have these tariff wars. It did in 2018 and 2019. Again, we're here. Tariffs on U.S. caused soybeans to cause a 20 to 30% drop back 5, 6 years ago. AMD, ADM, Archer Daniels, they were one that I actually owned at the time and got hurt on pretty badly. So that was a good learning experience for me, and especially over to China. So be careful in that space. How can you figure out where the company's revenues are? Well, this is just grok. I mean, you used to have to go through and control F and find a 150 page 10K form, but you can just go into grok and just type in whatever company ticker you want, whatever. You can look for revenue, you can look for, the materials, you can find whatever information you want there. So this is one way that I use AI, and I'm sure Josh and a lot of other people are a lot better at it than me, but easy way to kind of figure out if you own a company, if you're concerned about something, just hop in there on Grok or ChatGPT, pop it up for you, rather than spend an hour or two researching through a 200-page document. All right, the least affected sectors are going to be obviously the utilities. We're not producing power for other countries. You got healthcare, limited issues here. I would obviously be wary of healthcare right now just because of RFK and who knows what in the world he's going to do to healthcare. And financials should have less indirect exposure. However, if you do have an economic slowdown, they're going to be hurt. So theoretically, a tariff shouldn't cause an issue for a regional bank because they don't do much overseas business. But if you have a true economic slowdown, they're not putting out mortgages, et cetera, that's going to cause issues here. Pretty much have covered all this stuff already. Yeah, the big key here, and this is something that I know Josh, Bigger Texas, and I have talked about for about 2 years here, is discretionary spending. We're seeing credit card default rates go way up, auto default rates go way up. The consumer only has so many dollars in their bank account, and when you see an inflationary rise like we've seen over the last 4 years, all of a sudden everybody's living a little less comfortable. I know I am. I'm sure everybody in the chat room is here too. Well, think about the fact that I think it's 64% of American GDP is consumer based. And if people can no longer spend, you can only open so many credit cards. That's going to be a massive issue that we have to figure out. The only way to get out of that is to realistically, from my opinion, continue to grow GDP to get out of this kind of cycle. I don't know if we can. I don't, you're not going to get wages to go fast enough. It's a tricky situation, but that's something that I've been tracking for a couple of years, and I think needs to be on the forefront of everybody's minds when you're talking about market correction and what inflation does. That's going to be, from my opinion, the next great fall of the market, whenever it happens. All right, so the short term again, you're going to have stuff like your avocados from Mexico. In the medium term, you're going to have your supply chain adjustments. Well, people aren't going to maybe they move out of China and move it somewhere else. And then if they stay on for too long, you're going to have a total reshaping of basically the markets here. If they stay on for a couple years, you're going to have companies that are going to be dead. They're no longer going to be there because they can't continue to profit. You're going to have a totally different landscape. So that's just kind of all. Let's pray that doesn't happen, because if it does, then I'm going to be too darn busy. All right. So I've got, and I didn't put this on a slide, but I can always type it up and send it to everybody. And I've been looking at the S&P 500 here. What I've been looking at specifically are kind of three, I'll call it 2.5 different main options. The first scenario here is that the first leg down is not complete, and we're on a wave 5 of A. So again, there's 5 waves. There's 5-wave and 3-wave cycles. And we're probably going to retest the lows here. So we've got our 5 waves. All right, it's flipping back here. Here was kind of that retracement, the first retracement we had right there at the 50. The peak that I could really see a retracement going to here would be the 5,650, let's call it. But I think we've probably topped here, and we're probably going to retest the lows. So if we're going to call this here A and this is B, we're calling this is the finishing of the first wave down. This is the finishing of the wave up. We're going to look at either the retest here at 4,800, 47, call it 25, or even all the way down possibly to 4,300. That is certainly one possibility. So this one here just showing here's your one, your two, your three, your four, and your five would be a retest here or down here again. Now this could be the just the end of wave of the first leg down. So this might not even be the A B like on the other chart. This is just a different opportunity. This could just be the five wave, and we're not done. And if that happens, we could see a retest down here to the lows, or possibly go down to 4,700. Who knows what happens? And if we see a retest here, I would look for an ABC back up again to that 50% retracement or the 618 retracement, which would be the next one here. And then I would look for the final five wave down. Now this can chop for a while. This might play out over a couple months. And so we got to start thinking, okay, what's going to be the catalyst for it? So we'll get into catalyst here in a minute. And but I would be looking for probably a retest here at the 4,800 level, and then a run back up, followed by our final wave down. So I've got this on here because most likely, if this is going to be a pretty clean 5-3-5, you're going to have A equals C. So this is going to be the 1-to-1 ratio, which would end up down here at about 42.80. So that would be a pretty big drop here. Now let's say that ABC ends up going further up here. So this is going to be the final wave five. You see the ABC go up to the 618, which is going to be the most common retracement. Then we'd be looking at a bottom there around 4,400 would be a likely scenario. Or possibly just another retest at a 618, but not nearly as likely. So the key levels that you got to watch again is that low there. It's very rare that you don't see a retest of the low and the market just rips back up. And see what happens from there. If it rips back up, you might be done for a while. It's probably gonna be not over. It's probably gonna be a B wave, known as a sucker wave, and you can get a ton of short covering volume and just blow the market back up, even up to like 5,800. That's a possibility. But when you want to kind of try and find what wave count is going to be most likely, you really want to kind of think of, okay, what's the catalyst here? And I don't think that you're going to see this being done until Trump is done and settled with China. So I would be very careful on any bounce until you get the tariff negotiations specifically with China done. Now, again, the longer these tariffs go, the further down I think we're going to go. If we can get rid of most of them soon, then perfect. We might have that just straight V-shaped recovery. If they drag on for another 3 or 4 months, you're going to have some real pain, I think, in the markets here. At the end of the day, regardless, it's going to reset everything. We're going to have an awesome buying opportunity and probably a several-year good bull run after that. Hopefully, again, we can get this all resolved here. It sucks to dump the markets for tariffs, but we'll see what happens. That's a whole nother discussion. So Jeff, can you open it up and just see if any, I'd be curious to see of what other people's catalysts might be. If there's any questions before I go any further on anything.
Yeah. Yeah. So, folks, if you want to raise your hand, if you want to come up and talk to Joe, or if you want to use the live chat, feel free to do so. But let me just clarify with what you meant by that. Are you talking about catalysts that could send this back to the upside?
Up or down, yeah.
Up or down? Yeah. So, like, one of the things that actually someone mentioned today in the chats, it was shared by Zero Hedge, which I know you're aware of, was if the escalations continue with the trade war with China, Trump might delist Chinese stocks, which I think it could be a massive downward catalyst, actually, a pretty big plunge. If that happens, in my opinion, I don't think that the market will actually like that. But that's now ever since he said that in the chat room, I can't get that out of my head that Trump might try something dramatic like that. We do have a question here as well from Jazz, who says, "What power does the World Trade Organization actually have?" And and then we have another question. I don't think I actually don't even know the answer to that question. Do you, Joe?
No, I would say next to nothing.
Yeah, that's what I would assume too.
I don't know the definitive answer and what their technical duties are, but I mean, they're America. We're going to do what we want to do, regardless of what they say.
Yeah, because I know China filed a complaint, but I don't think anything came of that. So I haven't heard anything, so I just ignored it. DSBS, which Mag 7 stocks are going to fall off the Mag 7, or will any fall off? Was a question. I don't
Well, I
think.
mean, it's just a name, and yeah, it used to be that what was it, the Magnificent Five or whatever. And it's just a name. The companies that I think are going to be most impacted by this are going to be Apple, and Apple for sure is going to be by far and away the worst. I know you and I've talked a lot about this, Josh, but when you have a company that's been growing for years at 2% and they produce every single thing overseas, that they're going to get crushed by the tariffs. But you have a company that's growing at 2% over the last couple of years. That's not a growth stock. That's a value stock. So it shouldn't be trading at a 27 forward PE. It should be trading at a 15. It just doesn't make any sense. There's no innovation left in that company, at least not that I know of.
Yeah.
So I would say Apple's at the biggest risk, especially with the tariffs, because they produce so much stuff over in Asia. Um, Nvidia is going to go through some struggles, but again, they're going to be in so much demand. I don't think they're going to be hurt that much long term. Microsoft is also running into some issues here where they're slowing down. Or AWS is expected to be slowing down, and that was kind of the whole catalyst on why they ran up so much to their current multiples. And if that AWS, not AWS, is it Azure, AZURE or something like that, Azure. If that Azure continues to slow, that's going to there's no way they're worth evaluation there at too. So I can see Microsoft kind of chugging sideways for a couple of years, trying to figure out what to do next.
Which they.
Tesla, I know Josh and I are aligned on our thoughts on this here that the stock isn't really the potential in the stock isn't in the cars. It's in the autonomous driving and the robots. So they're going to have a ton of trouble with the car issues right now, just due to the political stuff going on. They're slowing down production all over the world. The tariffs are going to hurt them a lot in the short term. But Tesla always kind of trades uniquely. You got your believers in it, and they're never going to sell their shares. Then you got the people who don't. Long term, I'm a big Tesla bull. I don't know if you'd buy it now or wait. That's a tough call. I've been buying a little bit when it was down around 200, but that's something I'll probably sit on for 5 years. I'm not looking to do anything with it. And then Google's running into big issues, but I'm not really caught up on Google terribly. I don't own it. I know that they just got sued again for antitrust over in Europe, I believe. Again, I think they're all in kind of they're all at such high peak valuations that how much upside can there really be left? Netflix is probably the most attractive one out there today. Their earnings did well again. They're basically immune to tariffs. But again, they're trading at high valuations. So I think the whole Mag 7 just needs to take a break for a couple years, personally, and just let the rest of the market catch up to it. We're at unprecedented levels of concentration in the stock market, highest of all time for the top 10 stocks. So I, I would just be hesitant with them. Amazon, I think, is going to do just fine. That's the other big one, right? I think Amazon will be fine. I think they're actually trading relatively cheaply. But I'd fade the rest besides pretty much Amazon. If you own Netflix, I wouldn't sell it. I don't know if I'd buy it here. I'd have to look into it. Um, and then just I'd start buying on Nvidia. I got charts going on Nvidia down to like $75 possibly, where I think it would be a killer deal. I bought a little bit for clients here at 100 with the expectation that it's going to go lower, but didn't want to miss it if it just ripped back up. So hopefully that answers at least some of the question.
Yeah, I mean, I kind of want to piggyback off of that and double click on a few different ideas because China also did not only Europe, but China also targeted Google as well. And then like Timu stopped advertising on Meta and Google, which was actually one of their biggest clients for advertising. So that was also a huge hit. That actually probably destroys Timu, but that also just is, good representation of how much economic damage China's willing to do to its own economy to for political pushes. And I really just want to hammer home that I think Apple's in a really dire shape right here. I wouldn't be shocked. I wouldn't say it's a high probability, but I wouldn't be shocked if China goes after Apple really hard in response to, the number one U.S. company, in response to us blocking H100 sales to China um, in retaliation. And then from there, like Trump does something even more dramatic, like delist Chinese stocks. Like that's a path of escalation that I am kind of trying to be super hyper aware of. Especially as we look for bigger drivers to the downside. I will say that as well that like even Ray Dalio has said publicly that these types of escalations need to be resolved immediately, and his greatest fear right now isn't recession. His greatest fear is a massive depression or war, is what he thinks could be the outcome of all of this. So he's super worried about that. And I see we have a question here. Another question: are Chinese companies going to face more headwinds like Baba and JD, or is there a chance that the Chinese government props them up in some way? I just don't think so. I will say Baba's chart doesn't look bad technically right now, but I would just be extra cautious, just the way that they probably commanded Timu to do that, and so I would be really concerned that they're willing to do even more damage to their companies, especially with the whole what drove the huge escalation in the Chinese companies was the AI story, and they just got cut off on further development with the blockage from NVIDIA. And I imagine if there's a substitute that tries to step in, they'll likely get cut off as well. And they don't have a good Chinese alternative, homegrown way to make those GPUs, and those chips. So I would just step with caution. The chart doesn't look horrible in like a daily scale. Like it's still within a decent fib retracement from the highs there. Is what I'm seeing, Joe. I don't know if you see anything different. I see you got it up right now, but
Yeah. I'd be more concerned about the weekly chart just rolling down. Um, when you're looking at the SMAs here, just kind of at a key level on the weekly and the monthly. You really don't want to see it going much lower. Otherwise, it's going to go way back down, probably and retest those lows in like the 50s. I I'd keep an eye on it if you own it. I don't necessarily think you need to sell it here, but I am totally out of China, personally, and for all my clients. I just can't trust them. I've been burned in the past by them with Baba and JD and other companies. So I'd be just be hesitant there personally. Other than that, I mean, cash is kind of king right now. I don't think I don't think it's bad to have a huge cap, much larger than normal cash position sitting around, so you can capitalize on whatever happens. And I also like what I'm doing with clients because I have to stay within kind of a range. Like if somebody's supposed to be in a 70-30 mix, I'm not going to have them at like 50% stocks unless it's a black swan event. 70% stocks are their target, they're going to be within 10% either way. But I've just been nibbling on good companies that are oversold, that are dirt cheap, companies that haven't, and looking at companies that haven't done well over the last several years that are now starting to do well, kind of some of the laggards. But I think it's just patience and just we're all kind of waiting to see what happens, in my opinion, here. And you can make a lot of good opportunities, and it's never going to hurt you to buy a great company that's trading at a discount. It might go lower, but 5 years from now, you're not going to be worried about it.
that's fair. That's a good mindset to have. Keep that long term mindset. What do you think about the idea that there's going to be like you were talking about a structural change though on the worst case scenario with multi years of tariffs? Do you think we might have a genuine like let's say the dollar continues to sell? Do you think we're going to have a sustained multiple compression and there's just going to be less just resetting of value expectations across the market? Where
It's certainly plausible.
yeah, because I
We're kind of in uncharted territory the last 100 years with what's going on. if they continue to happen, we're going to have such big issues across the board if they're on for 12 or 18 months. It's going to cause it would cause an economic, recession or depression, global economic recession or depression if we continue to do what we're doing. Um, I hope the current administration doesn't want to do that, but who knows? I'll be more concerned if we get to like June or July and none of this is resolved. Then I'm gonna have to start getting concerned and really planning on it. But I'm pretty much just sitting here crossing my fingers and hoping that we start getting some of this stuff figured out.
Yeah, that's fair. It's just hard to think that we're gonna be that Trump would be the one to back down. That's what I'm most concerned about. China's stubborn, and Trump will do anything he can to not look weak. Um, you know, so I just really worry about that dynamic. I see a question here. Can't China just buy chips from shell using shell companies and from third party countries? Yeah, in the past, that's what people assume they did under the Biden administration. I do think that this administration is probably going to go to further extents than Biden and keep a closer eye on that. So I don't know how likely that will be at this point. And I think that the trip that Jensen took today to China to talk to them is also representative of that. I don't think they would have bothered to talk to him if they weren't concerned about not getting any chips. So who knows how that
Yeah,
discussion went, but I think that kind of in itself tells you it's a real problem. And
I imagine the U.S. government is going to track all major orders. So I mean, you can buy some, but it'd be tough to buy what they need. I would imagine.
right, right, yeah. So, but wow, that was really good, Joe. That was really really good stuff. The whole PowerPoint and everything. It's kind of depressing to talk about right now, but to be honest, I think it's really exciting. I know it's not exciting for you guys when you're managing funds. Your clients might not be as sturdy in downturns, but as long as you keep them informed, I imagine it's not as bad. But it's kind of hard to keep people informed when there's not a single person I've talked to. A lot of hedge fund managers and economists on our live shows over the past 2 weeks have all just been like, we don't really know. Even people who usually typically like to come hard and heavy with like, I know exactly what's going on. Even those types are taken aback a bit by what's going on right now because yeah, I imagine I'll do a deeper video on whether or not I think the tariffs are effective at all at accomplishing the goals we want to accomplish. But I will pitch this to you, Joe. Like, what do you think about the idea of push to reindustrialize America? Not from the sentiment standpoint of it would be good as strategy, but do you think this is actually an effective route to obtain that?
It'd be awesome if we could do it. I mean, we shouldn't be relying on China for instance, medicine. For producing all of the medicines that we need for our people. It's a complex question because we can't afford to do it. Really, for my opinion, you would drive the prices of everything to the moon.
Yeah.
Now, certain things you can definitely build here. Um, but I don't think it's plausible, and I don't think it's realistic to expect to reindustrialize the people here. You can't charge can't pay someone $50 an hour when they're paying them $4 an hour over in Asia.
Right. And then
The cost of everything would just go to the moon.
that just makes, in my opinion, the bull case for Tesla just go through the moon because who's going to be able to make the robots, the mass amount of robots necessary to do that, or the capital to make that huge change? It's going to be Tesla. I don't think anyone else is in a position to, and why they're not going to pay that labor cost. Not only are they not going to pay the labor cost, but one of the things that I keep looking at is unemployment still at 4%. So who's even going to work these jobs? We just deported all the illegals, or in the process of. And for U.S. workers, only 4% are even classified as unemployed. I know that number is a bit wrong. It's probably not the greatest tracking, but it's not like absurdly off. It's not like there's 30% unemployment. So where do even all the workers come in to have this reindustrialization? And if we just even look at where American workers work, like they don't want to do those jobs. They want to drive Uber. They want to do DoorDash. They want this. They want to work in the gig economy. They want to have their own little stores on Etsy, or they want to work at a corporate office. They don't want to work in a factory, in a mine, or even if we're talking about foundries and stuff, like you need skilled workers, and yeah, the conversation goes on and gets worse from there. We don't have
Yeah, if
that.
you can figure out who's ever going to make the most robots for warehouses and whatnot, I mean, you make a killing.
Yeah,
Some company's going to make a fortune.
yeah, I know. I know. SYM is an interesting candidate because they make all the robots for, or had the contract to make all the robots for Walmart, but that stock's actually been hammered. So I kind of wonder if the idea is that Amazon kind of fills in that role, but then there's lots of rumors on Wall Street that Amazon's got a deal worked out with Tesla. That as soon as the Tesla robots reach a higher competency, that they are going to make a major purchase of Optimus robots. So, I mean, that's going to be, and let's say they even cost like 60,000 each. Even then, like you're gonna buy those. And if they get, and Elon says 30, if they cost 30,000, even like small construction companies might buy those. Um,
Well, you got to realize when you hire somebody, you're not paying their salary. You're paying their salary plus employment tax plus health insurance.
Plus
You're paying basically
benefits,
double what their salary is.
right? And then yeah, all of it. And then you also have to think about the efficiency of these robots that don't take lunch breaks, don't take smoke breaks,
Work all night.
work all night. Maybe they have to charge at some point, but so you're still talking about maybe working 22 out of the 24 hours in the day with fast charging and stuff being a thing. So
Yeah, that costs
yeah,
half of an employee, and it's a one-time expense, right?
right, right. So yeah, it's that economy. What that economy looks like with that is just going to be incredible. And then the new jobs just look like higher skilled jobs. So that's also kind of concerning. It looks like you'll have entertainment, you'll have corporate office, and then you'll have basically removed all of the blue collar jobs. Maybe more technical like plumber, electrician, and stuff like that. Maybe the robots can't do it, but it seems like the problem right now that they're working towards is the fine-tuned motor skills. And we've already seen, like, I can go to my fuse box downstairs, take a picture with GPT, and it can tell me what all the fuses do, how the wiring should be, and stuff. So it's not hard to think that if you put a camera in a robot and it has the fine-tuned motor skills, that I can do that job. So that's something also to consider. Now, will people? There'll be a bit of a culture shock with that, where some people are not trusting of it. But I honestly think that that's overblown. And as soon as a robot's doing everything for everyone, people are immediately gonna be like, "This is the most convenient thing." I think people will actually adjust to it so fast. I don't know how you feel about that, Joe, but I think that there's a lot of fear about it, and I think that it's going to literally disappear almost overnight once people realize like how easy their life is now.
Yeah, we're definitely in an interesting time. But
Yeah,
I've got to run. If anybody wants to shoot me, like, just message me a chart or a company you want me to look at or whatnot, I'm happy to. And then I'll try and plan something next week to kind of go over the other half of the PowerPoint that I didn't get to.
yeah, awesome. Well, I really appreciate your time, Joe. Sorry, I kind of derailed the conversation, rambled on a little bit, but really appreciate you coming on. Really great info. We're pretty well aligned, honestly, with a lot of this stuff. So, thanks for taking the time, and everyone enjoys it. Um, we've got some people saying thank you in the chat as well. So, hope to see you again, Joe. Have a good one.
You guys too. Feel free to DM me with whatever questions you got. See you
Awesome,
guys.
awesome. See you, Joe.